Ladies and gentlemen, it is with great pleasure that I'm presenting you the 17th edition of our annual In Gold We Trust report. The beginning of this year has been nothing short of captivating, marked by significant events such as the banking crisis in the US, escalating tensions in Eurasia, high levels of inflation, and the looming specter of a recession. As we embarked on the journey of compiling this year's report, we were met with the task of navigating through a sea of divergent opinions on the global macroeconomic landscape. It has been quite a challenging but a rewarding experience, one that has pushed us to critically examine and analyze the various perspectives that shape our understanding of the current economic climate. Gold, in particular, has been commanding our attention as it hovers around all-time highs in both dollar and euro terms. Furthermore, over the last couple of quarters, we have witnessed new record highs in various other currencies, including the Swiss franc, British pound, and the Japanese yen. This quite remarkable performance underscores the enduring appeal and the strength of gold as a store of value and a hedge against uncertainty. The title of this year's In Gold We Trust report is Showdown, and it's centered around a variety of upcoming showdowns. Not only a showdown between the West and the East, but also a showdown between competing currencies on the geopolitical chessboard, a showdown in monetary policy, and a showdown in the price of gold. But before we present the highlights of this year's In Gold We Trust report, we would like to thank our fabulous team and our premium partners. As you know, year after year, the In Gold We Trust report strives to be the world's most comprehensive and the most widely recognized analysis on gold. Our aim is to publish the gold standard of gold research. Over the course of the last 17 years, it has become a huge undertaking, and it would not be possible without the support of our fabulous team of 20 people working on 4 different continents. Together, we worked more than 20,000 hours over the last couple of months. We have been researching, writing, crunching numbers, preparing charts, translating, perfecting the layout, and preparing media work for the In Gold We Trust report. And now finally, we are pleased with the result of our work. So big thank you to our whole team. You're the best. But it would not be possible to publish the In Gold We Trust report and make it available for free in English, German, Mandarin, and also in Spanish without the support of our premium partners. Indeed, the crème de la crème of the gold industry. Now, I am pleased to present you the highlights from In Gold We Trust 2023 called Showdown. We predicted in 2 previous In Gold We Trust reports, Monetary Climate Change and Stagflation 2.0, that it was only a matter of time before the consequences of years of low, zero, and sometimes even negative interest rates come to light. Actions have consequences. Central bankers insisted that inflation was only transitory and that the inflation chart would look like a hump. They were slow to react. When they finally woke up, they responded with the strongest and fastest interest rate hikes the industrialized nations have seen in over 40 years. With economic slowdown now underway, and inflation rates still clearly elevated, the monetary policy trilemma of price stability versus financial market stability versus economic support that we warned about in previous In Gold We Trust reports is now a reality. What we are about to witness is nothing less than a showdown in monetary policy, which we cover in great detail in this year's In Gold We Trust report. Signs of an impending recession are emerging from almost all pockets of financial markets. whether it's the bond market, but also the faltering real estate market or the banking sector. Even the job market is now starting to cool down. Never before have so many factors simultaneously pointed to a recession. Hence the term, the most anticipated recession in history, is not unfounded. The annual change of the LAI, the leading economic indicator, successfully predicted all 8 recessions since 1960 and is currently at minus 7.8%, which is lower than its average value before any recession. Investors inevitably associate recessions with negative returns and drastic drawdowns. Given the current environment, we have examined which assets perform well in the various stages of a recession and which asset classes do not perform so well. You can find all the results of our proprietary analysis in the report, but here's a little spoiler. Gold allows you to sleep soundly, even in times of a recession. In geopolitics, we are also approaching a gripping showdown. The collective West, under the leadership of the US, is facing off against China, Russia, and the bloc forming around those two heavyweights, with 19 nations applying to join the BRICS alliance, including Egypt, Indonesia, Saudi Arabia, and the United Arab Emirates. Efforts to reduce the role of the US dollar as a trading currency are increasing, and gold seems to play a major role in this game, with BRICS countries, especially China and India, importing in the regain of 36,000 tons of gold in the last 20 years. This year, we take an in-depth look at this issue. We feature our traditional de-dollarization chapter and an exclusive interview with star analyst Sultan Pozar. We see yet another showdown looming in the area of commodities, with resource nationalism gaining momentum, ESG policies still stifling investments into raw materials. Global commodity supply curves are approaching almost vertical levels. The commodity supercycle that we have regularly highlighted in recent years is clearly intact and could gain significant momentum once the correction phase is over. We expect these themes to play out over the coming years, leading to rising commodity prices along with massive capital expenditure in the resource sector. And this leads us to the central topic of our In Gold We Trust report, the showdown in the gold price. Central banks have been net buyers of gold since 2009. This momentum has accelerated significantly in the past year. 2022 saw central banks increasing their purchases of gold by 152% to over 1,100 tons. And this purchasing spree has carried over into the first quarter of 2023. Not only central banks, but also investors will be looking to protect themselves from stubborn inflation, a possible recession, and increasing default risks in the financial system. However, even though gold is trading close to new all-time highs, investors could not care less about gold at the moment. From our point of view, surging investor demand will be the main driver of the next stage of this gold bull market. The gold price already seems to anticipate that the restrictive US monetary policy will turn out to be a bluff. Even if the gold price in US dollar terms has not yet marked a new all-time high, new highs in various other currencies are a harbinger of coming breakouts in US dollar terms. Other topics that we cover in this year's report are an in-depth analysis of the state of the US economy, including the presentation of our Incrementum Recession Phase Model. This model is designed to guide investors in their investment decisions during the 5 different recession phases. We cover an inclusive interview with Russell Napier on inflation, financial repression, and the CAPEX cycle. We've got an in-depth look at the flow of gold from west to east and the Chinese gold market in particular. We feature an appeal to end the squabbles in the sound money community between supporters of gold and those who favor Bitcoin. We've got background articles on various topics such as the cracker boom, the Chinese silver standard, and the proprietary bull market indicator for gold. We feature a detailed chapter on silver and its portfolio characteristics. And as always, we feature a detailed technical analysis of the gold price. In the last chapter, as every year, we ask ourselves the question, Quo vadis aurum, and present an updated version of our gold price forecast. Then, of course, we present an update to our long-term gold price forecast. We stick to our long-term target of $4,800 by 2030. In order to remain exactly on track, the gold price would have to rise to just above $2,400 by the end of the year. Based on the April 2023 closing price of $1,990, this would correspond to a 21.3% increase in the gold price by the end of 2023. And lastly, we again visit the Oktoberfests and discuss the purchasing power of beer. And also look at the price of iPhones in gold, measured over the last 15 years. Spoiler alert, gold is protecting your purchasing power quite well in beer at the Oktoberfest, but especially measured in iPhones. Ladies and gentlemen, year after year, the In Gold We Trust report strives to be the world's most recognized, widely read and most comprehensive analysis on gold. We thank you for your interest and the trust that you place in our analysis. A special thanks goes out to our premium partners. Without their support, it would not be possible to make the In Gold We Trust reports available for free. In addition to the annual publication of In Gold We Trust in 4 languages, we now publish our monthly Gold Compass, as well as ongoing information on our In Gold We Trust homepage, ingoldwetrust.report, where you can also subscribe to receive the report. We consider the examination of the past as an indispensable for a successful preparation of the future. Now we invite you on our annual tour de force and hope that you enjoy reading our 17th In Gold We Trust report as much as we enjoyed writing it. Many thanks for your interest, and remember, in gold we trust.